Morning, everybody. It is May 8th, 8:10 a.m. Welcome to my channel. Yesterday, of course, crazy FOMC day. Rate unchanged, no surprise there. I know Powell was saying that, inflation and all this stuff makes them cautious. The tariffs, and it's unpredictable, blah, blah, blah. So, no one expected any change there, right? And then while the FOMC came out, Trump was talking, Percent was talking. They sent markets down with saying they're not going to remove some tariffs. Then they talked about chip curbs, and that propelled the markets higher. And then now there might be a trade deal with Britain, or there is a trade deal with Britain, so that made the market go back up. Basically, this market's nuts, right? Early on, I had a couple longs. Basically, it was a small green on the day. I don't really like trading FOMC days, so then I just took the rest of the day off. But that's what brings us to today, right? So right now we're gapping up. Pretty nice gap up into key levels. We'll go over that in a little bit. All right. So let's get into this here. Welcome to my channel. My name is Steven Gonzalez. I use market profile, volume profile to find structure in the markets along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. Helps me find my edge, right? Now, during the market, when the market's open, I use my market internals, right? It lets me know under the hood who is in control, okay? And I just hope to share what I've learned with you, okay? Now, every morning I do this, and hopefully you can join me, all right? I give you the market story, obviously key levels. I give you the market news, the economic calendar, the earnings, the leaders and the laggards, basically what's driving markets. Okay, go over daily charts, and we go over triple-headed monster, which is your bond, your dollar, and your VIX, and then it brings us to the Nasdaq and ES futures, which I give analysis, right? And then I give long and short trade scenarios, right? And then once the market opens, that's new scenarios that I'll look at and I will provide on my Discord. Okay, so without further ado, why don't we get right into what's moving futures today? All right, let's get right into it. Let's see here. Whoa, Ethereum is up 9.40%. Wow. All right. Bitcoin up 3.47, almost at 100K. Crude's getting love again. All right, almost up 2%. Russell's up 1.4%. Nasdaq's up 1.28%. ES up 0.95%. The Dow is up 0.76. 10-year yields up 0.56. The dollar is up 0.34. 30-year bonds being sold. Silver is down 0.57. Gold's down 1.20, so gold's pulling back a little bit. The VIX is down almost 4%, down to a 22.62 VIX. So the VIX is starting to move down a little bit. Okay. Now looking at the Mag 7 Plus, let's look at those together. We have Coinbase, which is the Bitcoin proxy, getting a lot of love, up 4.18%, followed by Google. Now Google had a big news yesterday, Apple and Google, about Apple removing Google search, right? And possibly using AI, and then it caused Google to fall pretty good. All right, so they're up 2.17% today. Broadcom's up 1.97, Meta's up 1.90, Nvidia up 1.77, Amazon up 1.64, AMD up 1.62, Tesla's up 1.42. So a lot of these are up pretty nicely. Apple's up 1.05, JP Morgan up 1.02, GE up 1.01, Microsoft up 0.84, Netflix up 0.72, Berkshire Hathaway up 0.70, and Boeing up 0.64. And the only laggard is Eli Lilly. All right, Eli Lilly. Now they did have a dividend. All right, let's see what their dividend was, $1.50. All right, so that makes sense. You know, usually when their dividend, the stock goes down as much as their dividend. All right, so moving on to sectors. All right, let's move on to sectors and see what we have here. Now, of course, the risk on, risk off indicator here is semis. Now, semis are up 1.64%. Remember, Trump talked about getting rid of some of these curbs for chips. That's propelling some chips here. All right. Now, They're leading the pack, up 1.64%, followed by technology, up 1.14%, financials up 1.05, energy's up 1.03, industrials up 1.01, discretionary up 1.95, industrials up 0.84, communications up 0.77, basic materials up 0.56, real estate up 0.53, and staples up 0.11, utilities flat, and the laggard is healthcare. That's because of Eli Lilly. Eli Lilly. Okay. That's your roundup for futures. Now, I do, for myself, some portfolio things that have been looking nice has been Oscar Health. Oscar Health. They had good earnings. They are up again. Okay. Another one is Hims. So Hims is pretty much doubled very shortly here. So I'm up pretty nice on that as well. Who knows what happens in the future? We'll have to see. All right, now moving on. We're going to go to economic calendar today and some news. All right, so economic calendar and some news here. Let's go to the economic calendar and see what we have going here for today. Yeah, we have jobless claims every Thursday's jobless claims. All right, consensus 230. All right, that doesn't seem to move the market as much anymore. However, that's been the case with that. Now tomorrow we have a bunch of Fed speak, a ton of Fed speak tomorrow, a ton. All right, that's a lot of Fed speak. All right, now let's look at the earnings calendar and let's see who reported. Right, so yesterday after the close, AppLovin, Carvana, ARM, Cleveland Cliffs, Axon, DoorDash, Dutch Bros, Occidental Petroleum. Okay, before the open today, Peloton, Shopify, ConocoPhillips, Kronos, Warner Brothers, Crocs. All right, LNG. Let's see. Today after the close, Trade Desk, Coinbase, Marathon. So some some Bitcoin related stuff. Let's see here. Mercado Libre is a big one. Cloudflare, SoundHound, DraftKings, Affirm, Wolfspeed. Before the open tomorrow, TerraWolf. And that's about it that I would know. All right. Going back, let's go back to news here. And let's see if this has anything for us. Let's just see. It doesn't. It doesn't. There we go. All right, let's look at some stocks here. That's been moving markets here. All right, let's go. Warner Brothers stock fell 2.2% after the media giant missed first quarter revenue estimates and weighed down by lack of big box office hits. ARM Semi stock dropped 7.7 after the chip technology provider issued a weak revenue forecast. AppLovin stock soared 13% after the mobile technology company topped expectations. Restaurant Brands stock fell 0.2. All right. Crocs stock rose 4.4 after the casual footwear company reported better than expected first quarter earnings. Peloton stock fell 3.4 after the fitness company reported a loss. Krispy Kreme, ticker DU Nut, stock slumped 24% after the donut chain reported first quarter results that fell short of analyst expectations. Wow. All right. Molson Coors, ticker TAP, stock fell 5.9 after the brew reported disappointing first quarter earnings and lowered its full year outlook. All right. There you go there. All right. Now more news. Britain set to strike first deal to cut Trump tariffs. The United States and Britain will announce a deal to lower tariffs on some goods on Thursday. All right. U.S. AI execs to give Congress policy wish list for beating China. Top executives at American AI giants, OpenAI, Microsoft, and AMD are set to appear at a U.S. Senate hearing and outline ways they believe Washington could stay ahead of Beijing. All right. Let's see what else here. Let's see. All right, it says, meanwhile, gold prices fell, softening trade tensions reduced the metal safe haven appeal. Oil prices rose, supported by impending U.S.-China trade hopes. AMC Entertainment, the company on Wednesday reported a 9.3% fall in first quarter revenue, as fewer blockbuster releases from Hollywood studios led to reduced attendance. All right. Just going to look for any. Fortinet, the company forecasts second quarter and annual revenue slightly below Wall Street estimates on Wednesday due to slowing demand for cybersecurity services. All right. Occidental Petroleum, the company beat Wall Street estimates for first quarter profit on Wednesday, held by strong production and favorable commodity prices. Production rose nearly 19% to 1.39 billion barrels of oil equivalent per day. Just trying to see what else here. There's a lot of news here. Tesla, car maker country head for India, has resigned after 9 years. All right. Costco, JP Morgan raises target price to 1088 from 1070. Uber, Needham raises target price to 100 from 90. Walt Disney raises target price to 100 from 87. Alrighty. Now, let's look at some charts here, some breadth charts. And you know how I like to use these charts, okay? This is your percentage of stocks in the S&P 500 that are over the 20-day simple moving average. Generally, when you get up to the 90s, we almost got there. That is a little frothy. All right, that's a little frothy. So we went back down to 74 today. That should rise back up. Now, when you get in the 90s, up here, that's very toppy, and you usually see markets correct a little bit. All right, every time you come up there, you correct. So just be on the lookout for that. All right, just be on the lookout for that. And now, what I like to look at is the bullish percent index of the Nasdaq 100 is 76% of stocks on a buy signal. All right, 70% of stocks on a buy signal. Let's look at the S&P 500. Let's see how that looks. 69% of stocks are on a buy signal. All right. And then we'll look at the AII because I believe they came out with the survey. Let's see how bullish they are now. Percentage. Only 20% of those investors are bullish. Now let's look at the bear. Bearish, 59%. So still pretty at extreme levels here being bearish. So interesting here, right? Interesting. And let's just look at new highs minus new lows and we'll move on. That's at 19, so kind of in the middle here. All right. Overall market, the NYSE, is kind of in the middle. All right. Now remember, yesterday we had big movements in the markets. So where something closed yesterday because of FOMC might skew this a little bit. You can see how far down we were April 8th, right? Okay. Moving on. I think we're done here. All right, we're going to get right into daily charts. And then we'll go into the hourly charts. Got some key levels to show you guys, okay? Let's look at these daily charts together, okay? Good old SPY, real zoomed out here. You can see that dip, right? Now, we pushed up, right? This was last month's highs, last week's highs, right? And we pulled back right to the 90. Look at that 90-day daily right there. 50-day moving average is there as well. Okay, so we closed yesterday at 561. Today we're at 566 and a half. We're all the way right here, right at this key resistance level. Okay, right at the key resistance. So do we pop up? Do we tap the 200-day moving average today? Don't know. 100-day moving average, all right there. I would think if we move, we probably get caught in between these higher and maybe get a little pullback. All right. Now, if we look at our futures, right? You can see we're in a balanced area. Okay, if I was going to draw it here, let's around right here, we're in a balanced area, right? That's our balanced area in futures. Okay, so the 5600 area has been support. I've been talking about that. Now we got that like 5715, 5720 area as resistance. This is our area of balance. So we're going to have to get out of this, right? In how the markets move. Markets trend, imbalance. Trend, imbalance. That's all they do. So look to the left. This is where this big balance area, right? This area here, I said it would slow the market down. Okay, so that's why we came up here. Market slowed down. Now, what do we do after this? You probably make a move somewhere, up or down. Okay, up or down. Let's get rid of these. Okay, that's what we're doing. So big time right here, last week's highs, last week's lows, last month's highs. Okay, moving on to the Qs. Qs have some important levels as well. We'll get into those. All right, here we are. Here's the Qs. Qs, where'd they go? 9MA daily. Found support there. Closed above the anchor VWAP of 2025, right? You can see the 200-day, the 100-day above us. You could see that congestion to the left, like I said, would slow down the market. We've had 3 resistance points on the daily charts at the 200-day moving average. 1, 2, 3. Okay. Now, we closed at 483. We're at 489.75. 489.75 brings us to this resistance level. Okay, right up in this area, last week's highs. Okay, we're above last month's highs, so the Qs structurally are a little more stronger. Okay, they're above last month's highs. Okay, and about to tap the 200-day moving average again. Now, is it resistance again and we fall, or is it going to break through? Don't know, right? Really don't know. Now, there is a nice channel here, right here. You could do it with daily charts. Look at that channel. Look at that resistance. Keeps being hit every time as resistance, right? I want to keep that on my charts now. All right, so let's look at futures. You can see that channel in futures as well. Okay, so in futures, right, look at the balance. The level to look at is 202.78. Let's call it 202.70. Look to the left. Remember, I just talked about the balance and the ranges that would be problematic for the market move up. This has stopped this. Okay, so we have our range, our little balance range, right? We're being stopped from this high volume node here in futures. Okay, now I'll give you a big important level in a second on the hourly charts. So what do we do from here? We're going to either move lower, trend lower, or trend higher. Okay, and then we'll form another consolidation, but we all have to see what's going to happen, right? Support is that 197.50 that got a little broken yesterday, but still holding down here. Okay, so that's what's going on. Okay, that's how the market works. Now, if you really want to get technical, you do have an inverse head and shoulders. Okay, coming up here. I don't think you guys can see my marker on these screens. I don't think you can. Oh, you can. I didn't think you could. All right, so if I was looking at a pattern, right? Well, what do you have here? Shoulder, shoulder, a head, and then here's your neckline. Okay, that's your inverse head and shoulders here, right? So generally it's a bullish pattern where you push up. Okay, I'm not a big pattern guy, but that is a pattern. You can't deny it, right? You can't deny it. All right, moving on. Triple headed monster. Let's do it. Bond market. That squirrely bond market. That squirrely little bond market. Really just compressing price here, right? This wedge is probably going to get smaller and smaller, and then it's going to bust out. Do I know where? No. And let's see if I can show you a volume profile with this, just to show you probably this market. Let's go to this chart. Yeah. All right, this is what I wanted to show you guys. Perfect. Let's go to the bond market here. Yeah, that's what I thought. Just based on visuals, all right? I'll show you, of course, here first. Let's just look at this. This is all just, you see this big level here? This is that turquoise in the background. That's the most traded price of the last year. 4.27 yield. 4.27 yield. Okay? That shows me that's the most traded price of the rolling year. Right? Now, we go back to the weeklies. This is a weekly chart. Guess what? Most traded price of the last 5 years is 4.2 yield. That's where we're at. Okay? Get a little more granular here. This is a monthly chart. Okay? With each profile is a week. Look what the price is, the most traded price of the month, 4.3 yield. That's how much this price has been. Okay? Crazy, crazy, crazy. All right, let's go back to this chart so we can finish off looking at our triple-headed monster here. So that's why that's so important. All right, that this market is just at the mean of the last 5 years. Okay, now, so it's like I said, it's going to do something, but it's just in that price. All right, it's a magnet. Now, moving on to your dollar. That dollar is still hanging out down here. Remember what I talked about. Market does what? Balances, then trends. Balances, then trends or trends, right? It's ready to make a move, the dollar. We don't know what it's going to do. All right, we don't know what it's going to do. Now, the VIX, the fear is leaving the 30 days out of fear or hedging. Okay, let's look at it. This is last week's highs. Okay. I'm sorry, this is last week's highs and lows. We're just in a range, right? Now we're at this level here, 22. Do we go lower to 20? Don't know, right? Don't know. But that's where our fear or our hedging is at. All right, moving on. We're done here. We're going to go to that hourly chart, and I'm going to show you big time levels in futures. All right, that's our ES and our NASDAQ. All right, so give me a sec. I'm going to pull those up. Let's do hourly charts here. All right. It's just really good to look at these, okay? And you can see, I'm going to show you big time levels here. Big time, big time, big time. You can't deny these levels. All right, so here's your ES futures, okay? I'm going to actually pull this down so you can see, okay, what I'm looking at, okay? So, important levels to look at. Number one, 57.17 is the most traded price of the rolling year. You can see this big spike. Okay. So, 57.17 is the bull bear line if for continuation higher. Look what happened when we first hit it. We sold off, right? Sold off, came down, FOMC. Now, where did we just hit resistance? 57.17. Okay. Next, you have the anchored VWAP in futures from the beginning of the year, right there. That level's about 57.73. 57.73. Okay. Next, I'm just going to move this anchored VWAP right here to this candle. That is your low from FOMC. And that I'm going to watch that anchor VWAP now. Okay. So you can see how important these levels are. All right. And just to see it in candlesticks, look, this is the most traded price of the last week. This purple box. Still 55.50, the most traded price of the month. And you can see why, right? Look at all this trading here. Right? And you can see why this is the most traded price of the week. We're above both those levels. Now, this is a monster. What does the market have to do here, right? Let's look at it. Market has to push above this level and then find acceptance above it and see if it can break up to here. Remember, this is a high volume node. That level is 58.21. I would expect that to be the next move if you can find acceptance. Okay, What if we don't find acceptance above that level? Let's say we do this, then this. We're going down. Okay? I would think we would probably break this little trend here and test out the 55.50. Okay? Remember, May is generally bearish. Doesn't mean it has to happen, but that's what's going on. Okay? That's your ES. Now, moving on to your NASDAQ. NASDAQ has some key levels as well. Let's look at them together. Okay? Let's look at them together. All right, so what's jumping off here? Okay, look. Now remember 57.17? Well, Gook. I don't know what Gook means. Here is your anchored VWAP, this yellow line of 2025. The last time we came up to it, we had resistance. Well, guess what? It's right here, and we came up to it again, and we're selling off a little bit. Very important. That level's about 202.77, the anchored VWAP for 2025 in the futures. Okay, now this is a back adjusted contract. So if you put in just forward slash NQ, it's not going to be the same levels as mine. Okay, you'd have to put in the actual forward slash NQ M25 to see the same level. Okay, so same thing. What if we can't find acceptance over this level? We're going to go down. Now, where did I put that marker at? Well, now 198.74 right here. You can see the large spike here is now the most traded price of this year. So we were playing with that. Look how much we played with that level. Boom, 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 right? Became the most traded price of this year. Okay? So, we need to stay above that. We need to stay above it in order to stay bullish. Okay? In order to stay bullish. So, 198.74, write it down, most traded price of this year. Okay? All right? Market needs to stay above it. Okay? So, what now again, let's push this down just like we did in the ES, right? What do we have above us? Okay, what's the another important level here? Well, the most traded price of the rolling year is 206.84. Notice the big volume spike here. All right, notice where this channel hits. Right? If price was to do something like this, it's probably going to hit up here. Okay, that's your upside target, 206.84. Okay, so that's where we would go if we can break this anchor VWAP. Okay, if we fail here, okay, and we push down to the most traded price of the year, it's going to be a little battle. But if we break through it and hold under it, yeah, we're going to fall at least to 195, which is the most traded price of the month. You can see all the volume here. You lose that, we're going to go lower. So these are very important levels to write down. That's why I'm really harping on them, because they're just very important. Okay, they're very, very important. And it's a way, that's why I talk about the most traded prices. It's just a way to gauge strength. That's how I like to gauge strength, right? If a market can hold above a consolidation and move to another consolidation, that's showing strength, right? So that is your hourly charts. That was a little more long-winded than I wanted, but I feel like I had to emphasize the importance of those levels. All right, now let me get you the market profile, volume profile. We can move on to analyzing and looking at what happened yesterday. Okay. And you'll see these levels on my charts as well. Just not as clear, I don't believe. All right, so let's look at the ES. All right, so let's get into the market profile and volume profile analysis. Now the market pushed down. Now I don't know, the jobless claims came out. I don't know, something's going on. We're back at the midpoint of the session, so we're pairing some pump some of these gains, okay? And the way this market is, it's just the way this market is. Any headline risk, there's all this stuff that goes on, makes trading kind of hard, makes swing trading especially hard, okay? Now, if we're going to look at what happened yesterday, let's open it up. Let's look at it, right? So this was yesterday. I just didn't think from the unchanged market that something of substance was going to really happen. So you saw a push down here. I got long in here, right? Basically, I was small green on day, and then we pushed down and we pushed up, right? So where'd the open come? We closed down here, and then just to show you again the power of the most trader prices, right? The VPOCs of the week. We closed where? Right here, right at the most trader price. That's not a that just happens to be what happens, right? It's a magnet. You come back. It's like, oh, you come back to home. It's like you're home. Oh, you know what? I'm scared. I got to get back home. So that's what the price does when it doesn't know what to do, right? Now we are gapping up. All right, we're gapping up. Let's look at our little weekly profile here. Why is this lagging on me? All right, so you can see this box up here is the most trader price of the rolling year in the ES. That is that 57.17 price, okay? You can see the resistance before. I showed that in the charts I just showed you. Acted as resistance again, okay? Now, we have a beautiful level here with your overnight lows, 56.36, with your most trader price of the week in demand right here. Okay. Gap fill is 56.75. That's yesterday's highs. Lines up with the midpoint, 50% retracement of the overnight activity. And you have this little single print right here, which means emotional buying or selling, in this case, buying. So you just got this weak little stick. All right. I'm going to introduce you to my friend, Elfie. Can a toothpick hold up an elephant? Well, it shouldn't. So that's become susceptible if this market pulls back. Okay. That's a little weak foundation, little there. Now, if that weak foundation holds, you got to start selling those toothpicks because that's a strong toothpick. Okay. That's bullish. All right. So we got a gap up. We came all the way up to 57.17. Now we're down to 56.85. Okay. And you can see we're in this big balance range. Where's that low? 5,600. This area has been support for that market. You lose that, you go down to 55.50, the most traded price of the month. Okay? This is what we're working with today. Okay? A lot of levels. Now, let's open this up. Let's look at the actual price action because market profile is only 30-minute bars. That is your overnight action. Okay? We just actually broke this demand zone. Right there. See that? All right. So let's get rid of this demand zone. Okay. So that's the price action overnight right there. Now, we're going to talk about some scenarios here. Okay. So we're going to go with the ES scenario. Alrighty, let's do it. Now, this isn't the most bullish case, right? Because you just went up to where? Resistance, and you couldn't break it, right? You got the gap fill, 56.75 here. So our gap is disappearing, right? And you can see the most traded price was right here. We just broke that. That was longs. That's why the market's pushing lower, okay? Most traded price, you go through it, it's going to, just like I said, even like I said before, the market balances in trends. Well, that's what it does every day. You look at a 1-minute chart, does the same thing. That's all a market does. Okay. If we come back into here, yeah, that's going to be a whole bunch of indecision again, and just par for the course for this market. Okay. Now, if I'm going to talk about a bullish case, right? Well, this market would probably need to hold at least this gap fill. So the first thing I would like to see, right, is do you hold the gap fill if you push down? Even if you come a little in, do you hold it? And then you can work your way, work off these sellers to try to break the 55.17. And then we probably go to 57.40 in change up to this supply zone up here. Okay. You break this, it's a big level. Most trader price of the year, of the rolling year. Okay. Now, if the market, right, falls back to month-to-day view up back to this level, I would say it better not stay here too long into this demand zone, into the most shorter price of the week. It needs to get support and able to start to at least chop up here again and try to test this resistance. Underneath this 56.45 level, I'm not very interested in longing at all. Okay, now, where would I be interested? Well, if the market pushed through this level and where? Into this 5600 support. That has been supportive multiple times. Okay. If we tried again and you got the recovery, lower highs, well, we're going to come up here and probably chop in here. And it's just going to be well, we're in balance now, folks. Okay. That's it. That's all that I'm looking for. I'm not interested if this breaks. I'm interested if this holds. Okay, because market probably will be pretty bearish if it comes down here, but that's just how many times are we going to knock here? It's probably eventually going to break, or this is going to break, right? All right, so that's your bull side. If we're talking about bear side, right? Let's talk about it, right? Well, we know we got our huge level up here at our 57.17, the most traded price of the rolling year. So we're getting some this pullback's getting bought, right? What if we just go up, hit the overnight highs, take them out? 97% of all sessions hit the overnight high or overnight low. And we come up here and we try to break this 57.17 and we fail. We come back in, lower highs. Guess what's going to happen? We're going to start to take off all this and we're going to test the most traded price of the week, 56.45. You break that, like I said. Next is 5600. How many times can you knock on this door? I don't know. But boom, if you break that, that could break the market and you go down to 55.50, the most traded price. Okay. That's what I'm looking at here. Okay. All right. That's all there. All right. That's your ES scenarios. Okay. Let's collapse this. Okay. Let's go move on to the NASDAQ here. Okay, here's our beautiful NASDAQ. Okay, got a good profile here. Nice and kind of balanced, right? Nice bell curve to the profile. All right. Now, we have a larger gap, a lot larger gap in the NASDAQ. Okay. Remember, semis, tech pushing the markets, right? So here's your gap fill, 255. That's yesterday's highs. Okay, midpoint, 50% retracement of this overnight move is 286, 20086. Okay, now remember, this 202.77 is the anchored VWAP of 2025. Happens to be last week's highs. This has a supply zone. This has been resistance in the past. Okay, now we have the big level of around, let's call it 199. This is our most traded price of the week and the most traded price of this year. You want to hold on to that level. All right. And then the 197.50 was finally broken yesterday. But I would still put this in your range here from 197 support here. Okay. Because it was broken. Probably liquidity got swept That's all it needed to push back up, right? That's what happened. Okay, so all these shorts got crushed, and now we're up here. Okay, now we're up here. Okay, so we do have a weak confluence low here. You got your overnight lows matching right up with the most traded price of the year, the most traded price of the week. This could definitely be supportive. Okay, I wouldn't love it. You need to get out of here and to move up to come down back down here. Okay. Now, was this demand zone broken? Let's try. Let's see if it was. It was not. Remember the ES, this demand zone was broken. This held. Okay, this held price. Got your single prints here. Remember, that's emotional buying. If you come down here, you could take that out. Okay, so this is what we're working with here. Okay, so it's a little different in the NASDAQ because now we still have this demand, right? So if we're going to talk about scenarios now, let's do it. Let's do it. All right, we're going to talk about bull side. Bull side. All right, price is here, right? We have a demand zone that has not been broken. Demand zone has not been broken. So what could we do here? Well, if price pushes up, right, and comes into the supply, right, maybe even boop, taps the overnight highs, gets resistance, and then pulls back into this demand. That could be the pullback you need to break out and go up to this past 204. Okay, that's one. Now remember, the gap fills 255, 20055. So if the market gets weak, now this is the most traded price of the overnight right here. All right, that price is around 201.80. Break that, you break this, right? You come all the way down, gets a little scary, you fill that gap. Now these single prints right there, if they hold, whoop, that's bullish. Get ready to break those highs. Okay, like I said before, if the market comes back down to this area, that is not the best sign. You need to come in here, come in here, right? Come in here and bounce in order for you. I think that more of a move chops in here. I don't think we just all of a sudden break the highs. I don't know. Could. All right. Now, if you break, just like I said in the ES, break through all this most traded price of this year and most traded price of the week. If you break that level, you're going to come down to that 197 level. And just like the 5600 level in the ES, that's broken, you're going down to 195, the most traded price of the month. Now, I didn't mean to show that, but I meant to show if it gets support here, that could bounce up into the mean here. If you lose that, of course, you go here, and I wouldn't be really interested that much being bullish in this area. Okay, so that is your bull side. Okay, as far as the bears, pretty similar to what I was explaining in the ES. This has been resistant, 202.77, right? Anchor view up 2025, right? Right up here. So if you come down, boop, get bought up, boom, you make a new overnight high. I mean, you take out the overnight highs, and it gets a bull trap here. You fall lower high, you come through, you're going to test this support level right there, 203, 201.36. Boom, come right down, fill the gap. Now you could get a little bounce here, but if that's a dead cat bounce, you're going to go straight for 199. Like I said, that needs to hold if you're bullish. If it doesn't and you rip, you're going to test the 197s. 197 could get a little bounce, but if we're weak, we're going to go down to the 195 level, the most traded price of the month. Okay? That's your scenarios for today. Okay? Show me some love if you liked the analysis. That'd be much appreciated. Now, every day, please join me. Give you the market story, leaders, laggards, market news, economic calendar, all that jazz, daily charts, and I just gave you the long and short trade scenarios in the ES and the NASDAQ futures. Okay, we have big levels we're talking about today. Big levels. Okay, big levels of resistance, big levels of support, major VPOCs that I've talked about. Please write those levels down. Trust me, they're huge. Okay? So, that is it for me today. So remember, every trade, no trade's a trade. Hopefully everybody stays green today. So I'm gonna be sitting back and waiting. All right, this is a waiting. This is a waiting man or women's game here. All right, everybody have a great day, and let's get into this. All right, and if you want, of course, I'm gonna update stuff. I update stuff, market internals in my Discord. The link is in my YouTube homepage. So join if you like, and hope to see you in there. If people want me to come live, just shoot me a message here or shoot me a message in my Discord if you want to see more live stuff. I haven't done that in a little bit, um, but please do so. And other than that, everyone have a great day, and I'll see everybody tomorrow.